Hello and welcome to Pro Trader Strategies Market Commentary, Friday, August the 10th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get on with some economic data. Across the pond from Great Britain, we got GDP coming in at 0.1%, expected to be 0.2%, just slightly lower than expected there. Manufacturing production came in higher than expected at 0.4%, expected to be 0.3%, and they revised last month's number up from 0.4% to 0.6%. So a better revision as well. Preliminary GDP out of Great Britain going forward is 0.4%, in line with expectations. Construction output came in at 1.4% for Great Britain, expected to be a negative 0.2%. So knocking it out of the park there. Preliminary business inventories, which is a wanky number that I always talk about, is 0.5%, expected to be 0.3%. So inventories rising in this case is probably a good thing, with the rest of the broader markets seeing manufacturing increase as well, because manufacturing production went from, in Great Britain, from expected to be 0.3%, came in at 0.4% that we talked about, and the revision. So all of those things would indicate that a higher inventory level would be good, because they're building up, getting ready for a higher demand going forward. And then industrial production, I think I talked about out of Great Britain, 0.4%, expected to be 0.4%. Here in the United States, we got consumer price index, which is CPI month over month, at 0.2%, and core consumer price index, which strips out some of the more volatile aspects of that, like food and energy, came in at 0.2%, in line with expectations there. And that's about it for the economic data. Let's talk about the overall markets. We've got crude oil moving higher today after it bounced off that 38 Fibonacci level. That's going to be a major area where people look to come in and buy. It's usually, the 61 or the 20 or the 38 are those major extensions that people look to start getting back in after a pullback. That's what I believe we're seeing here right now, and the fact that it's right there at the point of control. But that 38 Fibonacci extension level did hold yet again, so that's why it's important to do those extensions, especially when you have a long-term 3-year chart on a Fibonacci. To do the extensions is quite nice, because it gives you those levels in between, and we're lining up with the point of control right now. Gold, again, nothing to see here. Nobody cares about gold anymore, it seems like. But the bonds are moving higher today, almost up a full point on the day. That's not necessarily economic data, I don't think. I think it's really the fact that people are trying to get short the bonds, and the bonds finally kind of popped on them. That's all I can really come away from here, other than also we're seeing all this turmoil over in Turkey. I think the Turkish lira dropped over 20%, which was a bigger drop than anybody felt during Brexit, which I think the biggest drop there on a currency was 17%. This was well over 20%. So that could be giving our bonds a push higher, as people are just looking for quality investments. They don't care about the interest rate here. They just want to make sure that they have a guaranteed investment, which is what our bonds will be giving them. So that's probably the catalyst driving the bonds higher today. VIX is moving higher slightly. Kept us out of the single digits, looking to get into the teens, I hope, but not quite there yet. And that is a product of the overall equities having a bit of a bummer today. I talked about on Twitter overnight inventory in like E-mini, S&Ps, NASDAQ. They were all short, and the day session didn't really try to flush them out right away. It was looking a little concerning. We have since tried to flush those guys out. I'll talk about that a little bit more when we get to those charts. But as you can see with the Dow Jones Industrial Average, over 150 points down on the day and opened up in negative territory. The NASDAQ down almost 40 points right now. Kissed the 9-day moving average, simple moving average. That will act as support after we peeled through the 61. I thought we would probably hold that. We talked about the way that the chart was setting up. Today we have a confirmation of a top here. I would expect it to at least come down, test the value area high, or come and test the 50-day moving average when that time comes. So as 50-day moving average comes up, I think we'll come down and at least kiss that. We are continuing to see higher highs and higher lows, which is a very strong pattern to the upside, but there's always a need for a bit of these corrections. I don't expect it necessarily to come down and go below the 50-day moving average, but I do see a little bit of correction because we're at these all-time highs. People are just dying to get out of their longs right now, just to take some profits there. E-mini S&P, similar situation, down almost 20 points on the day, topping pattern here. Again, higher highs, higher lows. Nothing really to be concerned about other than maybe having a little bit of a correction here and testing its 50 Fibonacci extension and or the value area high here. So right now we're just above the 9-day moving average, which is a short-term win for the bulls. All right, this is what I was talking about with overnight inventory. We see after the close, markets still continue to get short overnight, just almost unabated to the downside. This is the opening right here, and we continue to the downside after the open. Now we're starting to see a little bit of a push back up to about these areas, but this is still overnight inventory that has not gotten flushed out. So that's why I'm a little concerned with this. We also have this crossover with the 50 and the 200 simple moving average. That being said, and one thing to note with the simple moving average, it's not always day, it has to do with your time frames, but that crossing over is a bearish signal. As a matter of fact, I think they call it like the golden cross or something like that. All right, but that is a little concerning when you see overnight inventory get really short and the day session doesn't really come in, and a lot of that probably having to do with Turkey being in such turmoil. All right, a couple of trades that I have on. I haven't added anything, but I want to talk about a couple of trades that have been kind of beating me up. This short, remember I have on a long 2-year put, the 150 puts, working out really well for quite a while, but this rally to the upside has hurt. I'm not going to lie. I'm back yesterday. Was pretty close to, or actually 2 days ago, it was pretty close to being back to unchanged. That being said, all of this was on rhetoric coming out of Elon Musk. Now, I'm obviously bearish Tesla just based on the fact that they can't make any money. And then he came out and said that he was going to have, or had a buyer of his stock at $420 a share, which is really what drove this higher. That and the news that the Saudis were buying back in here. Now that the news is out, it's like you sell the news. So I think that's what we're kind of seeing here. Now with Google, I am short these 111 puts. They have done very nicely, obviously, to the upside. I'm well over 50%, or I'm just over 50% of my max profit on that. But I'm squeezing it out because those puts are way down here. I don't really expect Google to come down here and test this area here where we'll find support. So I'm going to ride this one out just a little bit longer mostly because I'm getting tested on a couple of my other ones, Facebook and eBay. So let's talk about Facebook right now. Remember, I am short the 180 calls in there, so we are right there at around, well, just when I started this, we were right around the 180 handle, which is where this point of control is. That's what I talked about the last couple of days, is I would expect it to kind of pierce through this the 50 Fibonacci extension. We got that, and a settlement below that. The bulls could not defend that area, and we settled below there. So that's what I was talking about. I'd like to see it come down here and settle down around this point of control, maybe even test the 61 Fibonacci extension here, which is a major area of where people will want to buy. So I think that we'll have this bounce, come down, test this again, and then Facebook might start to look to rally again. Hopefully not in the next 7 days, and we get that pushed down to the 175 handle, at least for a day or two. And that's all I'm looking for there. And then eBay is also not being a great friend to me right now, as it is testing me as well. So we're getting a nice little rally today, but at the end of the day, that trade, trying to get it to work out as well. And a nice little rally will help me out here. All right, and that's about it for today. Yesterday's webinar went off really good. If you guys like to build portfolios, everybody's got something like tucked away over there. I know we all like to trade in our margin account, but we have some stocks over there. If you are ever thinking about wanting to add some stocks or maybe a new sector, this is a great webinar for you all that want to add some stock to a portfolio. Rather than just giving an advisor or putting in a bid for a stock at a certain level where you think is a great buying opportunity, sell the puts there. That's what I talk about in this daily market or in this webinar. So go and check it out at protraderstrategies.com. You can email us trading@protraderstrategies.com to get that to you. And that's about it. Other than if you can't take that, take it easy and have a great weekend.